Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is August 22nd, 2025. Today on our call, we have the CEO, David Bibby from HyperCharge Networks. HyperCharge trades on the CSE, or the Canadian Securities Exchange, under the symbol HC, and it also trades on the OTC under HCNWF. The company is currently trading at 10 cents with about 71 million shares outstanding, or about a $7 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. David, good to see you. We haven't seen each other since we grabbed a coffee just down the street from my place here. So good to see you again. HyperCharge Network, company that actually has popped up a fair bit in the name, or sort of names popped up through our circles recently. So happy to have you on to fill in everybody on what the business is all about. So why don't we do that? I'm going to turn it over to you and let you start your presentation.
Great. Thanks, Paul. Good to see you. And I'm going to try something a little bit different here today. Normally, when I do these presentations, I start at page one. I'm actually going to start at the back of the deck and work our way to the front. So we'll see how that goes. So just from an investment highlight, so I want to talk to the investor audience here. HyperCharge IPO'd. I founded the company in 2021 and in June of 2021. So we just had our 4th anniversary. We IPO'd the company in November of 2022. And we provide turnkey EV charging solutions to a variety of property types. So multifamily. So we work with a lot of developers. We do public charging, and increasingly we're doing fleet charging. So from an investor's standpoint, the company has a clean balance sheet. We have no debt. Our customer base is amazing. Like if I was to kind of just replay how we got here today, I mean, when it starts out and you have a great idea and a lot of enthusiasm, you have no customers. Today, we have some of the best customers in the country here that are becoming repeat customers. I call them portfolio customers. So I'm going to touch on that. I'm also going to touch on our go-to-market strategy. We're a team of 15 people. I can tell you that we just finished our fiscal year end at March 31st. We just announced our financials. We grew at over 200% to $10 million. We went from 3 to 10 million the year before that. We kind of went 0, 1, 3, 3, 10. And I'll tell you how we got there. But a big part of it is our channel. So we work with strategic partners, and that's our channel to market. Point number 4 here on this is that we're aligned with, I would call them secular long-term market trends. So electrification is something that is only getting bigger. It's expanding. And despite, some headwinds in the market, mostly out of the US, globally, electrification, especially EV adoption, continues to grow. And even in the US, it's continuing to grow. For example, Ford announced a $5 billion investment in Louisville, Kentucky to build their next generation EV platform. GM had a record quarter last quarter, more EVs than ever. So what we're starting to see is we're seeing it's not just Tesla that's carrying the day. Still a great company with a lot of upside in their business, but all of the other OEMs are all in on electrification. And that's even in spite of the fact that in the US, the federal government has eliminated the $7,500 car credit. Point 5 is it's the team, right? My background, I can talk about that. I've spent 30 years working with some of the largest public companies in Canada. Prior to founding HyperCharge, I was the head of digital transformation at Finning International. It's a $7 billion cat dealer. I spent 20 years in banking as a chief information and chief technology officer at some very large public companies there. Early in my career, I worked at TELUS. And my whole mission back then was building cell networks and business internet. And so I know actually a very eclectic background that leads me to be somewhat of a specialist in this providing EV chargers and managed devices for that matter. And then I guess the way we think about things, number 6 here, is we think about things in terms of aggressive growth. Like our results show themselves, and there's never a straight line how you go from 0 to 300% growth or 200% growth. But the way we work, that's what makes us unique. I believe, right? Like there are companies that are much bigger than us and much better capitalized than us, but they don't execute better than us. And we're starting to see that. We've just recruited a few key players from some of our competitors that are struggling, quite frankly, because they're out in front of their skis in terms of how much they're spending. And so while we did 227% year-over-year growth, we also lowered our operating costs by 28%. So with that in mind, I'm going to kind of tell you about the business because you probably don't know anything about EV charging, but from a business and investment thesis, this is the company that we have here. So I'm going to come back to team later, but really what we're focused on is expanding our footprint across North America. And in North America, today, we're probably sitting at around 10% of all new vehicles sold are zero emissions. And, you could argue these facts, like in 2021, when I started the company, the governments, both US and Canada, said that by 2035, 100% of all new vehicles would be zero emissions. I really don't think that was ever realistic, but it was a catalyst, right? It was basically a big, hairy, audacious goal set out, and it spurred the industry. It continues to grow. I think it's going to take longer than 2035, personally, but it is going to happen. And ultimately, as we kind of look at how we built our business model is really important. One of the key things that we focused on in year one was just getting, I call it, points on the board. Like, who have you done this with was a question we got quite often, and the answer was nobody. But today we have sold over 5,000 stations. We've deployed over 3,000 of those across 400 locations, and I'm going to come back to that. But as we've done that, we've also diversified our revenue, and I'll talk about the business model of the company as well. But we're hardware, software, and services. We don't manufacture our own hardware. Early days, I had a choice to make. We could either build our own hardware, or we could work with some of the best companies in the world who are at much bigger scale than us, and we could use open standards. My telco background told me that there's no way we should be building a proprietary network that locks customers in. We should pick the open source route, which is what we did. And now it's completely, like, you look at ChargePoint, you look at Flow, you look at a number of those proprietary networks, and they're in trouble because they can't innovate at the speed of the world. We're able to bring new products to market so much faster than they are. And I'll talk some about that too as well. But we do the full turnkey solution. It's hardware, software, and services. And our mission is to grow our recurring revenue base to the point where on the first of every month, our recurring revenue will cover our G&A, our operating costs. We're not there today. We're not even at the 31st of the month. But you can look at our financials and you can see us narrowing that gap. And we're very close to break even, which I know is super important to the group on this call. And I appreciate you letting us be here. But we're on our path to get there. And we're very close to it now. And so it's kind of interesting doing this backwards, because I would probably spend the first 20 minutes getting to this point. Where do we see the industry going? is actually we're becoming an energy management company, not just an EV charging company. And so the grid is very constrained today. And even in British Columbia, we're already talking about oversubscription on the recent Site C dam that was brought online in the next 5 years or less. So what we're doing now is we're putting battery storage systems into our charging environments. And what that allows us to do is to lower our customers' operating costs, reduce the time it takes to get these things up and running, but it also allows us to work with the utilities on something called demand response. So we can actually become an energy arbitrage in the future here too. So we're really excited about that as a future for HyperCharge. The other thing we do today, every day, within the buildings through our software is we have dynamic load balancing. So what that allows us to do is to reduce the the demand's there, but we can reduce how much draw there is from the cars on the infrastructure. And so our software gets smarter. We start to add things like storage into the mix, lowers our customers' operating costs, increases our revenue as a company. And then at some point in the future, depending on jurisdiction, we think it'll also open up a new revenue line. So I touched on some of this already. Our growth has been phenomenal. We had our first positive operating cash flow in Q1 of last year, so that was a sign of things to come. But the only other thing I want to draw your attention to is that we have over $9 million worth of contracted sales in our backlog as well. So we're not starting the year, our fiscal year is March 31. So we were already 1 quarter in. We were already starting that quarter with 9 million in the backlog. I think I've covered most of this. I think the key one maybe to draw your attention to is sort of how we think about the business. It's ports under management, because that is, we make money when we sell the chargers. We make continued money as we manage them. So every charger that we sell has a software subscription and a maintenance subscription of some sort to it. And so that allows us to, as we scale up, that's what's going to allow us to cover our operating costs much sooner in the month. We've sold, as I mentioned, over 5,000. It's well over that now. And we've only deployed, as of this time, 3,000. So there's a lag. Our recurring revenue will grow as these ports come online. The segments that we have, car dealers, multifamily, fleet, municipality, we cover all those segments. Let's talk about some of the milestones here. I think what I'll do, just in the sake of getting to the point of sort of our company's scale, we're also getting a reputation for doing some of the largest projects in the country, especially out west. But we've done King George Hub in Surrey, almost 800 stations in one location. Oak Ridge is a massive redevelopment, over 500 there. Devereux, people go, well, what's happening in the prairies? They're one of our best customers. They're an amazing customer that we do full turnkey. We do all the project management, all the installation, we prime that, and then we manage it for them. They're a very ambitious and forward-looking company. So they have 16 communities. They're going to put 400 stations in across those 16 communities, and it continues to grow. And then on the far right here, the auto dealer groups that we've been working with on the battery buffer chargers that I mentioned. So what that allows them to do, there's a battery in here. I think you guys can see my mouse. Basically, this thing is always trickle charging at a much lower rate, so it reduces the operating cost for that dealership. And when they need to charge the vehicles, they get a fast charge. Plus, there's advertising opportunities with this giant display. And it doesn't take a year to get the utility out there to put these in either. They can actually work with the existing service that most buildings have. So to double click on our growth business model, it's hardware, open standards, our software platform, and services. We launched our service program about a year and a half ago, and we're continuing to scale that smartly. We don't want to compete with our channels, but we know that doing project management, we can provide a better customer experience there. And the industry is maturing too, in that a lot of people bought these chargers and they just thought they would run themselves, and they weren't really, the industry wasn't very mature in terms of O&M, operations and maintenance. And so if you read some of the reviews out there in the world around charger reliability, if I'm honest, that's why I started the company and left a $7 billion company, was I was highly frustrated with the lack of reliable chargers. Yeah, so much so that it got me to go, I could do this better, you know, with the right team. And that's what we do. We really focus on customer experience. I get asked all the time, what's our competitive differentiator? What's our unique IP? We have some great IP in our Evion platform and our Quantav advanced analytics platform. But the reality is it actually comes down to customer experience. You know, we'll continue to innovate there, and we're starting to use smart agents, AI, to monitor the network. What Evion does for our customers, I'll give you an example of that, where we work with one of the largest parking companies in Canada. And what we did with them was we actually integrated our system into their app. So you can park and charge seamlessly from one app. There's no need for two apps, which was a frustration that I had. So we created something called Plug and Charge. We now branded it Evion. It's an integration layer that allows us to integrate with other apps like parking apps, building management apps. We work with building fobs. We also work with fleet management apps. And that list just continues to grow. And that's partly why we've won these large customers. They know that we're innovative and responsive. So, and the beautiful thing about that is once we're connected into their networks and do a good job providing the service, when they have new buildings, they contact HyperCharge for more stations. So another bit here around our business model, it's capital light. So we don't really put our own capital in to own and operate chargers. We haven't done that. We've looked at a few different opportunities to do that and some acquisitions. A lot of people put a bunch of CapEx up thinking they would make a lot of money, and today they're not in great shape there. I will say for the right opportunities, we'll look at it and do look at putting our own owning and operating chargers. We're actually have launched something called Charging as a Service, where we'll finance the stations for the right customers, like AAA R1 type customers over long term. We like that. And then, you know, one of our biggest customers is Toronto Airport Authority. In the cell phone lot there, that quickly became a top 3 site in our whole network because of all the Uber drivers. So we love high volume places like that for where we would own and operate assets. Just a couple of ideas around where we provide chargers. It's multi-family. We don't really do single family unless it's a special case. We have a great single family product, but it's not our core market. The reason for that is because we don't want to deal with onesie twosie type operations. Secondly, there's no recurring revenue in it. So we go after multifamily. Fleet, you know, listen to me in 2021 and 22, I would have said we are going to dominate the fleet space. You know, coming from Finning, I was like all about that. The challenge was there weren't any fleet vehicles out there in the market. Today, that's starting to change. And so I'm excited about it, but you know, we needed to pivot pretty quickly, and we did, to multifamily. Part of the reason is that people want to charge at home or at work. So that's where the core of our business is. And then we fill in with fast chargers in public locations. And then increasingly, we're starting to see the larger last mile delivery vans and some of the return to home type situations where fleets are important, and we can provide service for that. So I'm just about done here. I'm done. How am I doing? So the market itself, right? This is where I normally start. It's a huge opportunity here. The nice thing about working in EV charging, like if I was doing maybe an AI play, it would be interesting because we'd be using a technology looking for a problem. In our case, we absolutely know what the problem is. It's the lack of reliable EV chargers. It's one of the biggest barriers to EV adoption. And the market opportunity is that, 1 in 4 cars will be electric and they all need somewhere to charge. And that's what we solve. That's the problem that we solve. And you could look at any of these reports that you want, Dunsky report, these ones that are here right now. I do think there's a bit of a dip in the market, but our business has never been better. So, and we're also, I think the key one to take away beyond EV charging is the energy management side of things. So that's basically my presentation. I went back to front. Hopefully that made some sense.
Yeah, it not confusing at all. It made a lot of sense to us. A reminder to everybody that's listening, of course, if you've got a question to ask David, please use the chat function and we'll make sure we get the question asked. So clearly, I think everybody understands the scope and size of the opportunity here. You can't basically be on the road without seeing a number of EV vehicles now almost dominating the roadways. But geographically, where do you guys operate? Is it just Canada? Is it just BC? Are you guys breaking out into the US? What can you tell us there?
Yeah, great question. Partly I did that back to front, so we have a slide on it here, but we operate in Canada. We're in 9 provinces, primarily BC, Ontario, and Alberta. Those are our biggest markets in Canada. A little bit in Quebec and the Maritimes, and as I mentioned, Manitoba. We're also in 13 states in the US. The US is a huge market opportunity for us, but we've chose to do it smartly in that, as a small company, we wanted to gain traction in our home market. And Canada is a great place to build an EV charging company because it's been very friendly for electrification. But we know that California, Texas, Washington, New York, big markets. And so we're strategically going there through a partner channel.
Mm-hmm. And David, so a number of different revenue streams here. You mentioned recurring revenue. You mentioned sort of the hardware install sales, things like that. But maybe break some of that down. Like when a unit is deployed, when a charger is deployed, how much does it typically cost? What do you guys receive, and what's the ongoing sort of recurring revenue you could get from something like this?
Yeah, it's a little hard to answer that question because it depends on how much make ready we need to do in the site itself. But I could break it down in terms of percentage right now. So today we're sitting at somewhere around 8 to 10% of our revenue is recurring. And that increases as those stations come online. Our margins are, and it depends on level 2 versus level 3, the DC fast chargers. There's less margin in the DC fast chargers, but there's more utilization revenue because they use more energy. The margins around those are probably 20-ish. The margins on the level 2, which is the bulk of our business, are much higher. So on a blended basis, we're probably around 25% is sort of our gross profit margin there. That's our target.
Okay, gotcha.
And over time, like the other thing that I really didn't touch on, but is carbon credits. So all of our stations qualify for the low carbon fuel standard. There's 2 in Canada. There's 1 in British Columbia, and then there's 1 for federally. So in BC, it actually qualifies for both. And the the challenge with that is, and why I don't really touch on it too much is, we're trying to build a business model that's durable, and there's always uncertainty around how long or how much those will be worth. I can tell you that the last year they've been excellent, but I really can't. I don't have a crystal ball on that one.
And sort of back to geography, where are you finding it easier to land business right now? Is it in the US or in Canada?
For us, it's Canada.
Okay.
Oh, and the thing, I wanted to share my screen again because I did
Sure.
bounce over it if I could. I don't really do a very good job of touching on this particular one. Who our customers are, some of the key customers, and it's just easier if we show that. So when we look at the different segments that I mentioned here, our primary market by far is the multifamily developers. We work with the largest developers in the country here. Mattamy Homes is the largest private home builder. For those in BC, you'll know many of these, Bosa, Quadreal, the list goes on, right? And so that market is continued to be really important to us, and we work very hard with those developers to spec in our product and work with their owners to and the stratas to continue to work with us. The second market for us is these parking companies. These parking companies represent probably 80%. I'm just guessing a little, so let's not quote me on that, but of the public parking, these guys, you'll know them, right? Precise and InPark, you'll see them everywhere. And so they're strategic partners of ours. And then some that I haven't got on this list we have a very large utility in Alberta and a very large national telco that we work with too as well here. And those guys are definitely big customers and huge opportunities for us too. We do a bit in the municipality space, more so out east right now. And then hospitality. This one, I love hospitality because that's a great one for us to own and operate. Like when people travel nowadays, if you're traveling by car, you're actually looking for locations that have EV chargers in them if you have one. It's a real hassle if they don't. So,
yeah, makes sense. Makes a lot of sense, actually. I didn't even think of that. Let's talk about financials right now. What's the balance sheet look like? You mentioned no debt. How much cash do you have? Are you looking for more capital? And if so, what would you do with more capital right now?
Yeah, we're about to announce our Q1 in about a week, so I think people should be watching for that. I mean, we're still a micro cap company, and we're close to profit. We've really reduced our burn rate a lot over the last year and a half, as you can see from our financials. We're not quite there yet, but we're really, really close. So the question is, what can you do with more capital? Right now, I'm seeing acquisition opportunities. In fact, I've talked to potential parties in the last week. I think there's something here for us right now too, because we are publicly traded. I think we could use our share currency, even though it's beaten down. Like we've certainly been over $1 as a company. We're at 10 cents today. It is something that I want to roll up a number of companies. Like if we can get to 20,000 ports under management, that's kind of a benchmark for us in the next sort of 24 to 30 months. We'll do a lot organically, but I think there'll be some strategic roll-up opportunities here. And so more capital would help with that. Recruiting sales and marketing. Most of our team is sales and marketing. We just brought on 2 new people that are, there were no industry experts 4 years ago. There was a couple. Now there's a few more out there, so more talent. And it would allow us to expand into the US. That's another area. And then the last one is the energy management. We're going to go big into that, and it'll take some capital to do it.
Gotcha. So as far as the stock, you mentioned you've been public just a few years here. Maybe talk about the insider ownership and any other significant, shareholders you can talk to.
Yeah, I don't have the exact numbers, Paul, right now, but and when we did our last round, it was very strategically placed. Like I reinvested again. I've been investing all along. I'm an owner, a large owner in the company. I think we're probably sort of in around the 10% insider ownership, and then the sort of the tighter group is probably, I would guess we're probably double that right now. Just ballpark on it. But it's pretty tightly held that way. There is a bit of public float out there for sure. But yeah, we've got a few. I brought in 3 larger investors into the last round. I think we were pretty much 4 or 5 people that did the whole thing.
And when did you do the last round? I know, but
It was in April.
April this year, right?
Yeah.
Gotcha. And what sort of challenges do you face? What sort of keeps you up at night right now running the business?
Well, honestly, I would say working capital is a challenge for us as we scale, like any small business. That's your challenge, right? As you start to build a $9 million backlog, it's like, okay, do you have the balance sheet to finance that too? So that's kind of a key thing. I mean, lots of big companies have working capital challenges too, but so that's one that is certainly manageable, but it's the cash to cash cycle. So it's that's one. I think that's probably the biggie. Like for us, like we're talking about like competition in the market, and because we now have a really solid brand and really solid relationships, like we get notified when people are calling on those accounts, like where you might not have before. So we're one of the top players in Canada. And but yeah, for sure, there's competition, there's margin compression, there's how long does electrification take? Those are all things, quite frankly, all of those are out of our control. So what I focus on is controlling what we can control, which is how many leads are we generating, our marketing, how much new pipeline are we adding, how many new I run the company very systematically in terms of leads, sales, delivery, and support. Those are key things. Those are things we can control, and a lot of the other things we can't control. But I mean, tariffs are bad.
Yeah.
Canadian dollar, at 30, what is it? US is 32%, not good. But I can't control those things. So what we control are how many new conversations are we having? Are our customers happy? Did we do what we say we're going to do and delight them? And if not, what are we doing to fix it? And so yeah, I think those are, I don't know. At the end of the day, you can only worry about the things you can control.
Absolutely. Question that I thought of just now, like when you do go to sell, are you finding the majority of the clients are more new build or retrofit?
Yeah, it's a great question. It's a mix of both now. Primarily, we focus on new build. Have done, and those large projects are all new build because those would be huge to retrofit, and they wouldn't have the infrastructure. So, but it's a little of both now, and especially with the parking companies, there's lots of retrofit in there too. So it's a pretty nice mix.
And how early do you have to get to these decision makers when it's a new build? Like, where is this in the design, or is this something as it's being built? I just I'm trying to figure out who you're sort of pressuring to sign the dotted line.
And it depends for sure. But the earlier the better for us. We're starting to see like where we have strong relationships with the engineering firms and others. We want to be further up that decision making process. But sometimes it can happen. Like we've had some where it's been like, hey, we have to put 100 of these in next month. And so that's the nice thing about us. Like we're local, we stock the products here,
Right.
and we can deliver. We don't stock everything, but the key things that most multifamily developers need, they can get it here. In fact, we do a lot of like pre-config. Or the best thing we do is we'll set it up so the electrician, all they need to do is plug in 3 wires and walk away. That's our whole mission. The guys in our configuration department, that's what they do. We also, I didn't mention, we sell managed networking on top of that. So that was another service that we added in the last year.
Yeah.
So that way we can control the entire experience end to end. And it's an increase, it's incremental revenue for us too.
Now, you sort of touched on tariffs and things like that. Maybe talk to your supply chains. Where did most of the hardware come from?
It depends. A year and a half ago, we reshored a lot of the product either into the US because there was a Build America, Buy America. So we went through this effort, let's say then, to do that. So we would qualify there, and then US started tariffing everybody. So the short answer is wherever it needs to come from in the most cost-effective manner. But we work with Vietnam, we work with Malaysia, we work with Europe, we work with America primarily. So, and of course Canada too. A lot of people don't want to, there was early on, it was like, well, we don't want Asian product was kind of a thing we would hear from time to time. But then if you looked at the cost between American-made product or North American-made product and an Asian product, like, your iPhone is not made in the US and it never will be, I don't think. Maybe India. But like, so that, right, there's just people don't necessarily want to pay 200% more for the same thing that they can get from Malaysia.
Now, David, this is going to be a weird question, but you brought it up earlier, and it intrigues me for a couple different reasons. But you talked about advertising on these units, these screens. How prevalent is that, and is that something you guys expect to generate revenue from?
There are certain large public locations where that would make sense. It does make sense. There was a company called Volta in the US that they made their money on advertising. They had screens and they gave away the charging for free. They didn't really make it work. They actually were pretty good. They were able to sell to Shell, who subsequently probably wrote it down. But anyway, I think there is a market for it, but it has to be in the right location. And we've got some tech that can do it. But it's not like, if you were to ask me where I think there's more money to be made, it would be in energy management than advertising.
Sure. Yeah, that makes sense. Of all the things that you're sort of working on right now that are somewhat new, I call them new initiatives. What new initiative gets you the most excited right now?
By far, energy management.
Okay.
That's the big one. Our charging as a service, where we finance, is another one, and U.S. expansion. In reverse order, in fact. That's like U.S. charging as a service, like financing. Because what happened was there were a lot of incentives to help grant money to fund the chargers. As those things dry up, the demand never went away, but the way people deploy capital will change.
Right.
So that's, and you asked me, where do we need capital? That's another area for sure. Yeah.
Gotcha. And then, as investors on our end, what do you think are the most important either metrics or catalysts that we should keep an eye out for to sort of understand how the business is doing?
Well, number one, I think it's narrowing that gap to profitability. I'd like you guys to be watching for that. Ports under management is my North Star metric, though. Like, I think that's key for us as we continue to scale up, because there's a lag to that recurring revenue. So there's revenue, GP, and ports under management. Those are the three.
Mhm. Gotcha. As you can see, we get a question in from Russell. He says, you spoke of people thinking of charging stations when traveling. Do you promote this to municipalities, or i.e. attracting tourism? Would they promote EV charging within their tourism, I guess, system?
Yeah, I think it's becoming table stakes,
Mm,
for sure in the hospitality world, that they have it. And so that's number one. And yes, we do promote it to municipalities increasingly. Like there are a number of, I mentioned in Ontario specifically, there's a couple that we're working with right now,
mm,
to deploy some fast chargers in their locations. And we've done some in like rural Alberta as an
mm,
example. Like it's, everybody who puts these in wants to put them in the core of the big city because there's
mm,
lots of adoption, but there's also people are traveling, so you can still, if it's done right. And so the
mm,
cost coming down on the chargers helps that. Like if you had to, let's say 2 years ago, it cost $300,000 to put a fast charging station in, or a set of stations in a
mm,
location. We could now do that for half. So, and that's where the economics get much better.
mm. You know what? You're in my neighborhood. There's a high school just built or up the street from me. You might even know which it is. But what I found interesting is there's charging stations right in the parking lot of this new high school. So it leads me to think that almost any longer term stay type of building, whether it's even a restaurant or hotel, like you said, you can't sort of plan any new build without having to think about these things being installed now. Is that the case?
It is. It
Mhm.
absolutely is.
Yeah. Yeah.
And I
So
do know
really,
the high school you're talking about.
you probably do. Yeah.
Yeah.
Fantastic. Okay. So Russell also says, let's cover this off. How big do you think energy management could grow, and what is your plan? Like, how do you go out and grow that part of the business?
Yeah, it's I'll say stay tuned
Mhm.
on the how part. But how big? It's huge. It's absolutely huge. BC Hydro specifically, from what I heard, is going to deploy $400 million into battery electric storage in the next 5 years. So that's just one jurisdiction. I think
Mhm.
it's for me, it's now where do we play? Like so, it's also like it's always nice. I have some slides that they're not in our deck,
Mhm.
and I'm a bit conservative about like showing like this is $1 trillion
Mhm.
industry because I think people go, okay, great. How much can you get
Yeah.
of that? And so I think where it makes sense, all of those customers, many of them who are in high utilization, so their
Mhm.
buildings are already in the top tier of energy consumption. That's our target
Mhm.
for starters. And because as battery prices come down, which they're coming down significantly, which drives EV adoption, but it also drives battery energy storage adoption. So our plan is that we have somebody on our team whose sole focus will be on this to start with. And we're already going to be using the same sales team that we have because they have the relationships. And
Gotcha.
like we always do, we'll work with great partners.
Yeah.
You
Yeah.
have to. Yeah.
Yeah. Fantastic. Okay, well, listen, I've run out of questions. It looks like our audience has run out of questions as well. So we always like to give you an opportunity to leave a summarizing or key message. What do you want to make sure everybody walks away with today?
Yeah. First of all, thanks a lot for your time on it.
Mhm.
Key message is like as a public company, like our share price has probably never been worse and our company never better. So if you kind of just keep that in mind, there's an opportunity here. And of course, there's all the standard disclaimers, but we have a fantastic team of people that are out building every day and selling more product. And I think we have the right business model to build a durable company. So I'd leave you with that.
Mhm. That's fantastic. Well, we've been speaking with CEO David Bibby of HyperCharge Network, symbol HC on the Venture Exchange. David, it was great to catch up today, and look forward to the next time we can get a chance to chat.
Great. Thanks, Paul. Thanks, everyone.
You got it. Thanks, and bye for now.